Hello traders, welcome back to Officially Above Average Market Mondays. My name is Justin Arroyo, here to give you guys a little bit of an update of the past couple of weeks that we've had for Market Mondays on this channel, as well as giving you guys a new update for what we see is going to happen with the next couple of weeks. So, thank you guys for coming, thank you guys for watching. If you haven't watched the other two, please go ahead because we've had some great analysis that has been projected over the past couple of weeks. Last week, we did not have a video for you guys as it was very, very slow in the foreign exchange market, and we just didn't feel that it was necessary to place a video out there if it wasn't going to provide as much value as the other ones had. So, one thing that I do want to go over before we start the two analysis that I'm going to be working with this week, those are going to be USD CAD and AUD CAD. But we do have AUD JPY that I actually had taken a trade for last week that granted me about almost 100 pips of profit. And it was also talked about and discussed a little in depth on episode 2. So Officially Above Average Market Mondays, episode 2, Euro USD hits 20-month lows, published on March 11th of 2019, had the whole move before it had actually happened. So as you can see in the video, I'm not going to play it. You guys can go take a look. Link will be in the description below if you want to go take a look at the first video and the second video and their outcomes. But you can see that we were steadily being supportive of 78. And we were rejecting that, and you can see that we were looking for the retracement of 79 somewhere inside of our retracement region. Again, you can go see those specifics in the video if you'd like, but we were looking for that sell-off around 79.0 to grant us about 150 pips to the downside to our target at 77.5, if not lower. Now, if we go to this, you can see that the 2 weeks of price movement, the week that we had posted that one, again, was March 11th, so this was the March 4th candle, and you can see that the March 11th candle was right here. So we ended up having the retracement intraday that allowed us 1 week of retracement to that 79 structure, and you can see how we had those lower descending movements and that crash that ended up breaking 79 and 78 and is heading to our target at 77.5. So this was a great move. We'll step down to the daily. I won't go into this too much, but you can see that we were right around here when that video had been inspired, and we ended up having our Fibonacci region of the significant lower high to the significant lower low, and we ended up having the retracement into the region of 79, but also our golden Fibonacci ratios around here, which granted us the opportunity, and I had taken the sell around my entry criteria of this daily candle on March 20th. So 4 days ago, March 20th was a Wednesday, so we had our midweek reversal at that point, Wednesday and Thursday. And we had Friday that completely smashed 78.0, and you can see that we broke through it. So with the entry strategies, 1, 2, 3 pins, the lower high, the break beneath the MA, we were able to actually miss this whole catastrophe of manipulation just because I didn't pay attention to it. So I was able to fortunately go past all of that and enter right on the close of that day and was able to catch the accumulated pips. So that is the end of AUD JPY. Hopefully you guys were able to catch some pips. We are going to be putting that venture out there that you guys are going to be able to follow along with us on the pairs that we are going to be working with. Now, the next pair, USD CAD, one of the majors. We do not really work with majors too consistently. We do work with them in terms of a reference point. Now, the reason being, we will work on some videos that will provide you with all of the background information that we have for these type of behind-the-scenes things that we have inside of our mind. So with USD CAD, this is actually one major pair that I do actually actively trade. The other ones are used as a reference point, just like your DXY, right? So in the overall long-term scheme of things, we've had these higher lows and higher highs that have been accumulating for almost over a little bit over a year, maybe a year and a half. So the most recent was this higher low that's been established here, this high that's been established here, and the most recent higher low. So if we were to take a fib from that, we did say with that AUD JPY that we do want our retracement values to come somewhere in the 61.8 and 78.6 ratio percentage, so that if we can get that, we will look for our entry criteria, and you can see that a higher low and a bullish engulfing break above my MA immediately granted you about 150, almost 200 pips, I'd say, of profit to this date. So overall, I do think we are going to work our way higher, and we can do an equivalent AB equals CD move for that. And you can see that we just reach our 272 and just shy of that 1.4 projection. So overall, in the weeks to come, this will take about maybe 2-3 months in order to fulfill the overall move up to 1.4. The next couple of weeks will provide moves to 1.35 and 1.36, which is what I will be paying attention to during these next coming weeks. So as you can see, we ended up having the bullish engulfing, which was the entry strategy. One move to the upside that ended up breaking 134, and then the retest of 1325 quarter value before exploding back up and breaking that 134 structure. So again, we can do this same methodology over and over and over. We take those higher lows, we look for a retracement back into 61.8786. We find our entry criteria, and you are automatically granted about 65 pips if you hadn't caught the 133 trade. So I think overall in the next couple of weeks, I will be looking for the moves to be projected to 1.36 in total. But I do think that we are going to have a little bit of retracement, possibly not any further than 134. But we will be working our way up to that 136 move with the 272 extension in the next couple of weeks. So I'm going to be looking for more movement to 135 for the following week, possibly the week after, to work its retracement, testing one of these significant values, a retracement zone, and then working our way up to that 136 structure in total. So I don't want to give you guys too much information. I don't want to cloud your guys' mind with all of the things that we will be talking about in other videos. But I hope you guys are enjoying the analysis so far, the recap of AUD JPY, the overall analysis for USD CAD, and now we'll go on to AUD CAD here, which I'm very excited because we're just starting a very, very large movement from what I can see. So the higher lows that have been established here, we can see that this has been in an overall downtrend for quite some time. Now, the flash crash that we had at the beginning of the year provided us with the higher low that we were going to be using in order to make our determination or our projection current in price. So, same scenario, same methodology applies. We take our current low that we have, and we take our current lower high in the overall scheme of things, and we can see that the price returns into my golden Fibonacci ratio zone, 61.8786, and provides us with the opportunity, the higher low, and a break above my MA. We've also broken a counter trend line on the weekly, so I am looking for more upside movement for this pair for sure. So I'm going to be keeping an eye on this for the next coming weeks, and hopefully we can see a move that I'm going to call it 0.975 Canadian dollars. We will see that move play out. If we were to go any further, that 1.0 value will be achieved and established. We can take that equidistant move if you'd like, and we can see the projection goes to our 272 extension. So everything is playing out very, very perfectly in our eyes. We're just going to wait for the best possible opportunity to take these moves. And as you can see on the past couple of weeks, we have been projecting in a what looks to be a left shoulder ahead and a right shoulder opportunity right at our 94 psychological value. So the break above the MA was my final straw. That was the overall long-term projection that is what is going to enter me into an overall buy. Now, obviously, we have to have stops beneath the low to cover any sort of retracement, but this is only for you guys here on the channel, because once we provide you guys with that little venture that we have that provides you guys with the maximum amount of entry and maximum risk to reward, you will see that risk become quite more loose. It's going to be looser. It's going to be a lot tighter than what's projected in this video of stops beneath the low. So overall, I do think we are going to hit 9.6 for the next coming 2 weeks. I think that'll take 2 weeks to play out in total, maybe even next week. So hopefully we can get to that 9.750 in the next couple of weeks to come. That was the overall weekly. Now, coming back and looking at this on the daily, let's refine this very quickly. The trend line, you can see, has 1 test, 2 tests, and the 3rd test we ended up having the breakout. So the same methodology applies over and over and over. Let's take a most significant low, let's take a most significant high, and we can see the retracement unfortunately does not come to our 61.8, which is why I end up having my 382 as one that's established as well. So there's no 50% that's established inside of here, but you can see that 382 is the ultimate level of support that provides us with a left shoulder, a right shoulder, a left shoulder ahead, and a right shoulder opportunity. The higher low, break above my MA, and the push to break 9.5. So there is a possibility of a little bit of retracement. I am not going to be worrying about that too much. This is the overall analysis for a swing perspective. So if you guys are looking for opportunities, definitely the buying opportunities, the buying momentum for Aussie CAD is working its way to the upside. I do think we are going to continue to break past that 95 structure, maybe even at the start of market open, but ultimately 96 and 97.5 is going to be our overall targets when it comes to this swing analysis to provide for you guys on officially above average Market Mondays. So thank you guys so much. I'm going to pass it along to Harrison, and you guys will be able to see a couple of his analysis and recaps from the weeks prior. So thank you guys so much. I'll see you guys in the next video, and I hope you guys enjoyed.
What's up, guys? Thank you for tuning in to episode 3 of Market Mondays. So getting started on my portion of the video, I figured I would share how my idea played out on CAD JPY from episode 2. And in that episode, I mentioned how I was looking for CAD JPY to make a push up back to this disturbance area, which we did end up completing, and then actually going back up to the, to retest the 83.5 level. And that was where I was looking for selling opportunities. So seeing how that played out, if we followed this idea that I put on TradingView to a T, unfortunately the stop loss would have been spiked, but that's just a learning opportunity for me. I should have placed the stop loss above the 61.8 level. I'll definitely remember that for next time. But the idea still played out really nicely. I'll try and put a screenshot of a trade that I currently have running plus 180 pips. So I'm just going to have that run, hopefully, to the downside target that I mentioned of 80.7 on episode 2. So that's, yeah, that trade's looking really nice. And let's begin the analysis for this week. So on the fundamental side of things, a lot of the fundamentals are USD based for the week. We have the US Q4 GDP on Thursday, and then the PCE inflation data for Friday, and that is also for the USD, as well as some Fed speakers that are going to be talking throughout the week. So because of that, I am going to stay away from USD, and I typically tend to not trade the dollar very much. It is the most traded currency, and the banks love to manipulate where most people are putting their money at. So this week, I'm definitely going to stay away from the dollar and look at other pairs. So looking at NZD JPY on the daily time frame, keeping it very simple, we've had this uptrend from 73, and these 3 rectangles that I have on the chart are where I'm looking for price reversals. So last week we had that big drop on Friday back to the 75.5 level, and fundamentally we have the NZD interest rate decision on Tuesday, and that's what I think is going to push this thing up to 76.5. As long as the interest rate decision doesn't surprise the markets and is lower than what we expected, this thing could definitely crash below both of these supports and retest the 74 level. But I think the general consensus is that the NCD interest rate decision on Tuesday at 9 o'clock EST will push this thing right back up into this 76.5 level, where, as you can see, there has been a ton of selling sensitivity, and I do not see us breaking that. I would need to see a bullish closure above this rectangle that I've created in order to see more higher highs being formed within the next few weeks. Taking a look at Euro JPY, it's more or less the same analysis. So looking at Euro USD as a reference, it's currently sitting at 1.13 support after that big crash that we had on Friday. So I'm looking for a retracement back above the 125 level and then complete 50% at 125.3. Take all profits at that level, and then at that point kind of wait and see if this consolidation continues or if we can make some kind of breakout to the downside, because Euro, I'm very bearish on Euro, and I think Euro USD is eventually headed to 1.1. So Euro JPY, I think, is eventually going to follow the same trend as Euro USD and fall back into the 123, 122 levels within the next couple of months. But for this week, very short-term trade, looking for bullish momentum. We are very well below our moving averages, and I'm looking for a 50% retracement.
Conclusion of episode 3. Thank you guys so much for watching. If you like the content, please leave a like, comment, subscribe. Links will be in the description below for our trading views, so you can follow along with our personal trades taken from these analysis. And follow the link in the description below for the Discord, a community platform for follow-ups and updates on these trades and analysis as well that you'll see inside Market Mondays. So thanks again, and I'll see you guys in the next video.